we've seen such an incredibly low volatility regime here with Bitcoin
Mm.
price. So we look at our Bitcoin volatility index, which measures the implied volatility on CME options. And that's been hovering, at the 12-month low range of, implying 35 to 40% implied vol for Bitcoin. But when you look at the actual realized vol, so the actual like price movement of our reference rate, it hit an all-time low of 24% annualized. So, I mean, Bitcoin's hitting, I would say, developed market equity level of volatility as an asset that typically had a multiple of like 2 to 3 times that of, let's just say, large cap equities. Now, we've had some dynamics that have changed. In fall of last year, we saw the SEC approve options, covered call options for these ETFs, and we've seen those products particularly gain a lot of interest in AUM. That's created, I think, a dynamic where you're seeing a systematic selling of Bitcoin volatility, and that I think has helped kind of keep Bitcoin's price on a relative standpoint much less volatile, while at the same time making new all-time highs. So what does that do for investors? Well, if Bitcoin continues to perform well and it's exhibiting less volatility, that tells you that's generating strong risk-adjusted returns. It always had strong risk-adjusted returns if you studied Bitcoin's return per unit measure of risk, but now it's even, I think it's skewing even better. And we always do that in our monthly market. We show sharp ratios of like things like Ether, Bitcoin, global equities, bonds. And you just see, like, the past 12 months, Bitcoin's just really done particularly well.